The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we look at Tuesday's closes, we saw the grain trade under pressure. Bean oil did its best to hang on to strength on the day, but wheat and corn largely pulled soybeans lower. Moderate losses really across the board. Cattle did their best to recover after the sharp sell-off on Monday tied to those bird flu concerns. Stocks under some pretty heavy pressure, and crude oil up around $85 a barrel again. So we got plenty to take a look at, and I'm excited for our conversation today. It's been a few weeks since we've talked with Matt Bennett from agmarket.net, and he joins us here today on Market Talk. And Matt, it's good to catch up with you again, my friend. Thanks for joining us, and hope you had a good Easter weekend, Matt.
Yeah, absolutely. Appreciate being on. We did have a pretty good Easter, other than my Illini getting the living crap beat out of us by UConn on Saturday. We took a woodshed beating there, but they got to the Elite Eight. I don't know. I love watching college basketball. I even enjoyed watching that girls' game last night. The first one, Caitlyn Clark versus LSU, and Iowa. That was a great game, but. It's just a great time of year to watch some ball games. So, in all honesty, Jesse, last night we had 3.1 inches of rain right here close to home. So, it's too bad the tournament's going to be over because I'm going to need something to be doing here.
Well, and I will say about that Illini loss, you were the first person I thought of when I saw that big 30-0 run. Not to bring it up again, I know it's painful, but tough one there. And I know my wife was not happy with Tennessee's loss to Purdue either. That was a tough game. And then that women's game, Iowa LSU, was very, very good. Caitlyn Clark, me being an Iowa guy, she's just unbelievable, Matt. Watching her throw those up.
She's something else. I mean, she can absolutely play ball. I've never seen someone that can pull up from 35 feet with that much confidence. They were saying on the thing last night, well, maybe we ought to have her and Steph Curry have a 3-point shooting contest. And I don't know. I think she'd give him a run for his money. I mean, she's something else. I mean, I just never seen someone shoot with that much confidence, in the college game like she does from that far out. It's just, it's really, really something to behold.
It is. Fun fact, I called a couple of her games in high school, and she was just as good then as she is now. So, in fact, she's probably better, honestly, and I think she's going to keep getting better. It's just, it's amazing. To your point, it is that time of year. And to your point as well, you mentioned getting rain in the Eastern Corn Belt. Man, oh man, we're thinking spring planting here. Already got some planting happening in some of the southern parts of the U.S. Matt, I guess we're getting into the month of April now where we start thinking about that and we start watching what these markets are doing. Just kind of an ugly start to the month of April in the grain markets post USDA reports, Matt.
Yeah, I mean, you look at those USDA reports and, I don't know, planting intentions. Obviously, 90 million acres on corn was a bullish number. As bullish or more in my mind was the stocks number. I mean, I think it's when you put them together, So, essentially the implied usage of corn was a lot better than the traders guessed, and I'm talking to the tune of 80 million bushels. You say, that's not that much. But here's the thing. Most of us knew usage was going to be pretty strong. It's pretty tough to kind of get a hold of it and to understand, hey, where are we going to come in at? Because we all know that we're talking about taking stocks up, 812 million bushels as of the last WASDE report. And so, you come in here and it's, you got 1 billion bushels more than what you had a year ago, but 80 million less than the trade guessed halfway through the marketing year. And so we're actually burning through more corn than what the trade assumed we were. And so I just kind of put that in my spreadsheet, and trying to forecast what this April report might look like. And I've got to think they're going to actually tick demand up a little bit. At least they should, based upon the numbers we're looking at, which could get your carry out, I don't know, like 2-1 or a little bit lower maybe, but somewhere in there. And then, that's the thing is you carry that into the next marketing year. And with 90 million acres, then all of a sudden you're thinking, well, geesh, we may have less corn on hand or talking less corn on hand for our new carryout a year from now than what we were talking today. And so, obviously a 178, 179 yield, you're going to have all the corn you ever want. But what it does is it just puts you in a situation where a little bit of weather issues will be watched maybe a little closer than what we thought before. So friendly report, but as you suggest, come in here, start out April, and good night. Tuesday here was rough. I mean, beyond rough. Nobody expected May corn to go down 9 cents. Nobody expected D's corn back down here to the levels that we saw before the report. I mean, 90 million acres. Yep. Let's just blow that off. I mean, I'm shocked, with a 91.75 average trade guess. There's a lot less corn in the loop here, and I don't think you're going to pick all that corn back up. But anyway, we can talk more about that. I think it's a very interesting report. Timing of it when the farmer was asked, may have something to do with it as far as how low it was. But regardless, it was a bullish report, and it sure doesn't feel bullish today.
Well, you teed it up for me, so I'm going to go there. I mean, 90 million acres of corn. I'm in the camp that number doesn't stick as we get into the summer. And with that timing of when farmers are surveyed, I wonder if maybe the trade is also leaning into that and believing that. And that's part of why these markets are just not looking great here to start the month of April. That money flow is just not there, because I'm wondering if the trade and the algos don't think 90 million is going to hold, Matt.
Yeah. I mean, here's the thing, Jesse. If you'd asked me Thursday afternoon, I would have said 90 is not going to hold. I would have said, we're probably going to get some strength in here. Here's the thing. Let's survey guys and gals as of March 1st. Horrible markets through the month of February. Typically, we get some sort of a bump, get some support. You're setting crop insurance prices. Lots of times you have a little bit of an acreage battle, even when sometimes you don't think you're going to get one. But regardless, you see some strength in February much of the time. March, finally, we rallied. But here's the thing. That was survey. It was as of March 1. Then I've got to think the average producer's like, man, I ain't planting corn. If I have an opportunity, to change my mind. And so I go back to that Farm Doc article that was written about a month ago, and it was looking at, in the state of Illinois, hey, what were profit margins looking like as of the time of that writing? And last fall, yes, corn was beating beans in a lot of places for most growers. I'll tell you what, corn prices came down significantly, and at the same time, anhydrous ammonia never came down. I mean, anhydrous ammonia may be a little cheaper, but Jesse, I'm here to tell you, with nat gas prices where they're at, anhydrous is expensive. And so, I would have told you Thursday afternoon, yes, I think if you could make a run towards, $4.90, maybe even $5, you're going to pick up some acres. At this stage of the game, if this market doesn't find some life, I don't know. I mean, I guess I'm a little up in the air on that, and maybe what we need, I hate to say it, but maybe we need a good old fashioned wet spring and some prevent plant acres, and maybe chew into this carry out just a little bit. Maybe that's what this market needs. But as of right now, I would say I'm not so sure that we do pick up the acres that I would have thought just a few days ago. And it's because of the way the market acted here to start the week.
I have the feeling here in this trade too, and you can disagree with me on this if for sure. I feel like in the short term, $5 might be a cap here in corn, and that if we get to that mark, it's going to be met with some farmer selling, farmer hedging, Matt.
I think you have a real hard time getting to $5, Jesse, and I know people don't want to hear that. I thought as of Thursday afternoon, once again, I thought $5. We'll see some $5 corn. We'll get a couple of months above $5, and you get maybe D's 25. Take a look at it first, and then maybe D's 24 ends up having a shot at it at some point in there. But regardless, I thought we'd get a chance to see some of that. But it certainly seems like the trade feels, I think, like I do, in that the long-term implications, or that this corn market's going to really struggle because of the fact that you're probably looking at a big carryout this year, making it to the point where you're still going to have a big carryout next year if you have 90 million acres. So, if you'd shave 2, 3, 4 million acres off of this because of prevent plant, now all of a sudden you can maybe build a bullish scenario into next year. But I'll tell you, a lot of cards have to fall into place for that to happen. And so, I don't know. Right now, $5, I'm like you. That's a tough row to hoe. And I'm afraid that we could spend maybe as much time below 4 as what we do above 5 in this calendar year from this point forward. And I know that doesn't sound like much fun. I'm just really worried that you're going to get into the time frame. Oh, I don't know, fall, whenever you've got a glut of harvest going on. I mean, it's going to be really tough for you to keep that market from just completely falling apart. You look at some of the historicals, and we've studied very closely 2013 to 2023, and then 20 into 24, and how 13 turned into 14. And it certainly looked like you had a little bit of a life in the market, as you moved into that spring time frame. But boy, going into fall, it was rough. I mean, well below $4 corn. And so I don't want to be an alarmist. It's just, I think we need to pay attention, because if you do get a run towards 5, I'll tell you what, you better pay close attention.
Matt Bennett with agmarket.net joining us here today on Market Talk. Matt, thinking about that overall acreage number being down so significantly on the USDA reports. I mean, and you think about soybeans, for instance, I mean, that acreage number came in pretty much in line. Cotton was a little higher than expectations. Spring wheat was higher, but still missing acres. I guess that was another big question mark for me, that looking across the rest of the grains, where did the acres go, and how is that going to shape this overall market picture on the grain side moving forward, Matt?
Yeah. So typically what happens whenever commodity prices are strong is we find acres. I mean, people plant acres that don't always get planted. I think some of your fringe states, maybe there's times whenever people would like to have what they would call a fallow year, where they kind of build their soil profile and get some moisture going. Hey, corn $6, maybe we go ahead and take a chance this year, And I think that in a year like this, whenever prices have plummeted, and it's not funny, it's just frustrating. Prices have plummeted the way they have while input costs are still strong. I think that you can find reasons to procrastinate corn acres, if you will, bean acres, whatever it is that's expensive to put in the ground. And so it's the reverse effect of whenever commodity prices are high and acres show up. I think that's what we're seeing, is that the people are saying, pump the brakes. I don't know that I'm that excited about planting a whole lot. Especially in fringe areas. If you look at the areas that lost the most principal crop acres, you're talking Kansas, you're talking Texas. And so I would talk, it's areas where maybe there's opportunities to do something else. I mean, what do we have a lot of in that area? We got a lot of cattle, and so some folks have talked about, hey, I put these cattle out on wheat. Who knows? Maybe I'm just going to try to pasture these things for a while. But bottom line is, it's just tough. Does the 6 million acres come back? I mean, historically, no. From planting intentions to planted acreage, you just don't pick those acres back up. And so could we this year? Of course you could. But what's it going to take to see that happen? You've got to have a rally, in my opinion, to pick those acres back up. So, I wrote over the weekend, Jesse. I said, you know what? This looks like a great opportunity over the next few weeks, but I'm still very, very cautious. Please don't get too bullish here. I had no idea we were going to start the week out like this, but this doesn't surprise me. I'll just put it that way. I mean, the trade again knows that whenever you're looking at, like, let's just say the last time corn had 2 billion bushel carry out 2 years in a row, that's 2017 and 18. All right. So 2017 through 19, your average market price was like 330 to 370, and so, are we heading towards something like that? If you have another 2 billion bushel carryover, that's probably what you're heading towards, is, some sub $4 type stuff. So, I don't think principal crop acres rebound like you would think they would. And I'm not terribly surprised. I talked about it all winter. I thought principal crop acres would be heading south. And so one thing I'll say, the last thing I'll say on this, part of the reason that I felt like they'd really be moving lower is that not just prices. It's just, I mean, we continue to lose tillable farm ground in the U.S. We're and a lot of it's renewable energy. Talking solar more so than wind turbines. There's a big push for wind turbines in my area right now. Still get to farm most of the ground, so you don't take near as much out of production. And I don't fault anyone for some of these solar contracts. I mean, I've heard some of the numbers and the math works. I mean, there's no question that you can't make as much as you can on the solar contract, farming it. And so I certainly understand it, but we are taking tillable farm ground out of production. So the macro picture of this, little concerning whenever Brazil continues to come at us with more acreage. They continue to reward the market with more exports. They're beating us on corn and soybeans right now, and I don't think that's a trend that's going to change anytime soon.
Energies too have been very strong. You brought up nat gas earlier. Crude, $85 a barrel crude. Gold has been shooting higher too. I mean, there's a lot of outside market pressure here to start off the month of April as well, Matt.
Oh, absolutely. You look at the dollar down a little bit today, and I think that definitely plays into dollar was strong though yesterday, and that's what's crazy is the dollar was really strong yesterday, and the crude oil was still able to hang right in there. And so I don't know. To me, I think a lot of people are talking about they want to have some commodities in their portfolio because they feel like it might be a good hedge against additional inflation that might occur, on down the road. Boy, I don't know. Equities yesterday and today. I mean, obviously, it seems like maybe a little bit of money is moving around here finally. And so, I mean, you look at gold. I mean, bordering all-time highs again in here. And the silver market was just absolutely on fire earlier as well. So I do think that commodities in general are maybe getting a little bit of a favorable view, whereas it's been a long time since you've seen money flowing from equities to commodities. So, maybe people see that they're cheap enough. Maybe that will be something that can save us in here. But unfortunately, it seems like when fundamentals are really bearish, people still tend to turn their nose up at our ag commodities, at times like this. So hopefully they'll be able to turn and look and say, hey, you know what, this stuff's cheap enough for now. We want to go ahead and buy into it, because I think that could be one thing that could certainly help us, even if fundamentals look rough.
Got to ask you, livestock, cattle tried to recover on Tuesday, somewhat. Huge sell-off Monday. This whole bird flu thing in dairy cattle, I know it's got the market spooked. A lot of folks are being cautious in here, and I know that Monday's move did plenty of technical damage to the cattle charts. Your thoughts on this whole situation and the little bit of recovery we got Tuesday, Matt?
Yeah, I mean, so we saw some of these contracts losing $6 on the feeders there on Monday. I mean, that was rough. Got back about half of it on some of those, whereas fats didn't quite get to half back. I mean, lost maybe $3 there on Monday, and then get $1 back of it on Tuesday, maybe overdone a little bit. Our good buddy Brian Splitt said that we had a monthly reversal lower, in the cattle market, live cattle this last month, and so that's something that you have a hard time ignoring. But there's one thing I'll say. Technically, there's reason to cause concern that this market could move lower. But at the same time, there's been times like, for instance, 2015, where the market just absolutely plummeted. 2015 didn't have near the fundamental bullish story that we've got in cattle right now. And so it's very complicated. One thing I'll say is that even as feeders didn't get back towards the highs that they posted back in calendar year 23, feeders still out on the cash market were running record highs for a lot of folks. I mean, you can't buy feeders. They're super expensive. And so, maybe there's a little bit of a disconnect between the market and actually what's going on out in the countryside. The other thing is, as far as fats are concerned, is a lot of these packers, they're pushing hard, to get these fats bought. They're obviously making some money. I'm not saying they're getting rich, but they're obviously making some money because they're pushing for them. And so before this debacle in the market, some of these fats were pushing 190. I heard a few 190s here and there. And so that's really good news. Now, what are we talking, 180 now? Are we talking 185? I think it depends regionally where you're at. But by all means, demand hasn't gone down. The only last thing I'll throw out there is, if we would see a little bit of a sell-off in these equities, it could certainly spill over into enthusiasm for cattle, especially if people start getting worried, for instance, about consumer sentiment. If it goes lower, 9 times out of 10, you'll see especially fat cattle back off, because ultimately it just hits consumers where they're a little bit concerned. Hey, can I go ahead and go out there and spend $100 a plate on these steaks, like we have lately? And, that's been going on for the last few years. You've been there. I've been there. We've seen steakhouses where, can't even hardly get in the door. If you don't have a reservation, you're not going to eat. And when it's all said and done, you got 4 people sitting at the table. You'd be lucky to get out for less than $500, but it's standing room only. Is that going to change moving forward? I don't think right now. And I think fundamentally things are really, really strong, and you're not going to change that anytime soon. But the cattle market, in my opinion, when you get up in the high 180s, it's susceptible to sell-offs. And that's part of the reason we've been really active with our guys saying, hey, let's at least set a floor under these things. What's it going to hurt? Because bottom line is $35 run lower last towards the end of the calendar year. That was rough to experience for a lot of these cattle folks.
Awesome thoughts, Matt. Final thing from you real quick. I know all of this, it just goes back to being smart with your marketing and managing your risk right now, doesn't it, Matt?
Yeah, there's tons of volatility. Producer has to try to simplify their life, figure out your break evens, run the math. If you can make some of these prices work, hey, set a floor under it, let the upside run, keep some flex in your marketing plan. But bottom line is this market is going to be tough to navigate if you try to figure out. Last thing I'll say that I didn't talk about, all this rain that we've had in the Midwest, I do think that the trade is saying, hey, maybe this drought thing's not going to materialize. So, if you do improve that national drought monitor, traders will pay close attention to that. So don't bet your money or make your marketing plan based upon a potential drought in 24, because right now it doesn't look so hot of a plan.
Good thoughts. Find them online. If you have questions, agmarket.net, or give them a call, 844-4AGMARKET. Matt Bennett, always good to talk with you, my friend. Thanks for joining us. Have a great week, and we'll talk to you again soon.
Absolutely. Thanks, bud.
Matt Bennett there with agmarket.net. That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.